How much do you want to lose on the trade? That's the question. Before you enter the trade, how much do you want to lose? We got to know. We got to know how much we're going to lose. Well, I was comfortable losing 250. So I can trade 4 micros. If I'm comfortable losing 250, I can trade 4 micros. If I get smacked and I lose $240, so what? Is anyone in this room going to care? No. No one's going to care. No one in the world is going to care that you lost 30 points, you lost $240. Nobody cares, right? So why should I care? Why should I care? Okay, $240, that's fine. We're already up about $150 on this account. So if I lose 240, I'm down $100. Big whoop. Now, what am I looking for? I'm looking for the next question that comes into play. And again, this is all getting played out in real time. So the first thing that gets played out in real time is, what's the setup? 20 SMA. We just lost a 20 SMA. Great. What's the range of that candle? 30 points. Great. How much do I want to lose on that trade? $250. Great. I can play 4 micros. Let's draw the supply zone box on there. Next question, what's my measured potential? Measured potential is, again, what's the theory that I trade behind? Before I even say it, what's my theory, regardless of strategy? Regardless of strategy, please, somebody tell me that they've listened to anything I've said. Whether it's a 20 SMA, whether it's a VWAP, a remount, whether it's an orb, what is the theory that I believe in when it comes to trading? Moving averages, I don't really care, right? Now, don't give me the strategy, give me the theory. If I believe that if we lose an area of demand, somebody finish that for me. Somebody finish that for me. And if it's not clear yet, then I guess I have to start shilling out the idea more. Demand to demand, supply to supply. Very simple. So let's go through this one more time. In real time, what am I looking for? I'm waiting for my setup. What's the setup? 20 SMA. Great. My reason why candle. What's the range? 30 points. Great. How much do I want to lose on this particular trade? Ask yourself the question. $250 I'm okay with? Fine. How many contracts can I put on? 4 contracts. Next, let's draw the supply zone for visual. That way, when things are doing stuff like this, right? Or it's back up testing the 20 and it's in my supply zone, I can just breathe and tell myself, it's in the supply zone. Why are you getting upset? Why are you getting nervous? Why are you getting nervous that it's in drawdown? There's no reason to be nervous until it breaks my supply zone box. Great. So that visual is on the screen now. What's my measured potential? Well, going back to the theory, supply to supply, demand to demand. If we lost an area of demand, what's the demand? 20 SMA on this particular setup. What's my next area of demand? And again, I don't need to search high and low across multiple different time frames going back 5 frickin' days. What's on your chart? What's on your chart? On my chart today, it's the 20 SMA and it's the VWAP. So in this particular setup, if I lose the 20 SMA, my measured potential is VWAP. So I look at that really quickly and I say, okay, if the low price here is 22,013 and VWAP is sitting at 988, I don't know if anyone caught when I mentioned earlier, 988, that's more than enough room there for me to take a scalp. Let's fire the trade if it confirms. It confirms here. I get put in a little bit of drawdown. Full disclosure and transparency, I was down about 90 bucks or so, right? When it did this, down 90 bucks. Why are we stressing? We're inside the supply zone. We're putting in lower highs, blah, blah, blah. And then as soon as it starts to push, you take profits where you're comfortable. Now, I have a rough estimate of where I want to take profits. If the ATR on the 5-minute time frame, and I can do this while I'm in the trade, if the ATR is 25 points, I'm going to cut the ATR in half. 10 to 15 points. If I can pick up 10 to 15 points, anything along the way, great. That's a hell of a scalp for me. I'm out. Negative risk to reward? Sure. I'm giving up 2.5 to make 1. I don't give a shit. The win rate is going to be high. The win rate's going to be high if I can control it. 4 or 5 questions you need to ask yourself. So how many questions was it? What's the reason for the setup? That's 1. What's the range of the candle? That's 2. Draw your supply zone. It's not a question, but it's a step. That's step 3. How much do you want to risk? That's question number 4. What's your measured potential? That's question 5. What's the ATR? This comes after you're in the trade. What's the ATR? Great. Cut the ATR in half. Look for, if you want to run a negative risk to reward ratio, remember, win rate percentages are much higher on a negative risk to reward ratio than they are on a 1-to-1 or anything greater than that. However, one losing trade will wipe away probably 2 to 3 winning trades. So the main focus is when you win a few trades, you got to stop. You got to stop trading. You can't just sit there and say, oh yeah, I win, 80% of the time I could just trade all day. No, not really. Because if you take 8 trades today and you win 6 of them and you lose 2 of them, you're going to be basically break even. You're going to be basically up or down $50, right? Down $50, up $50, break even. So the whole idea here is the only way that this is going to work, you got to have multiple accounts. The only way that this is going to work, you got to take maybe 1, 2, 3 trades per account and move it along, right? And that's it. This is an A+ trade. We had a nice gap here from demand to demand. It touched fully the measured potential, so you could have actually held it into VWAP. I didn't. I just took my cash. I made about $110 on it. And then, I was giving up about $250. So I don't look at this and say, I'm risking 30 points. Oh man, if I lose 30 points, I'm going to be down a heap, right? I could lose on this trade less than $50 if I want to, or less than $60 if I want to. I would just play 1 micro. The max pain here is going to be $60. Right? The max pain, even giving up 30 points. So I look at risk in terms of contract size, in terms of position size versus how many points am I risking. Like, look at this candle. This is a 67 point range candle. Well, I know that the cheapest that I can get into this particular trade is $120. Why? Because I'm going to give up at least 60 points. Right? Now, in this particular case, I could have chopped this way down. I could have used the IB high as a stop. I could use any closure back over the 20 SMA as a stop. That definitely chops it down. I'm just giving you like a very extravagant example there, right? But you can control how much you're going to lose on every single trade with the number of contracts you're trading. And guess what? If let's say you're not going to use a closure over 20 or a break over initial balance as a stop. If the trade is too expensive, meaning it's too much risk, you don't take the trade. Does that make sense? Just because it's a beautiful setup, just because it has momentum, if it's too expensive, you can't buy it, right? So imagine if I go to the dealership today, okay? And let's say I take, I take $10,000 in my pocket, right? I got $10,000 in my pocket. I go to the dealership and I tell them I want to go buy 5 Lamborghinis and I want to put $10,000 down. They're going to laugh at my face, right? I can't afford it. I can't buy it. I can't buy it. Right? Sometimes we got to window shop. Sometimes we got to watch things go pass us by because it's too freaking expensive. Sometimes we got to be patient. Right? We're not 3 years old anymore where we're going to sit, throw a temper tantrum, complain, cry until mommy and daddy give us what we want just because we're throwing a temper tantrum, right? So think about that in terms of trading. You want to make money, you want to take your trade. It's your setup, it's your strategy, blah, blah, blah. But you're not taking into account if you can afford that trade. Can you afford the trade? And if you can afford the trade, you take the trade. You take the trade, right? So anyways, that is what it is. What is that? How does everyone feel about that? How does everyone feel about that trade breakdown? Does that make some good sense, right? Because if that makes some good sense, you can definitely have, enough setups in the day to take a handful of them. Look at the 20 SMA here. Look at the 20 SMA here. Look at the 20 SMA here. That's 3 trades, right? Look at the 20 SMA here. That's 4 trades. I think, what was it? The 30-minute opening range win as well, right? 30-minute opening range, that's 5 trades. The VWAP remount sounds cool, right? VWAP remount, that's 6 trades. Essentially, there was 6 setups, and shit you not, probably all of them would have worked if you were scalping, right? If you were scalping, even this monster red candle here at a 67 point range candle, the low was sitting at 998 and it dropped all the way down to 986. This is 12 points. So if someone, again, if you were looking for 20 points, no, you didn't make money. But if you were looking for 10 points, you did, right? And even this big range candle here, the ATR was only 28 points, 27 points, right? So maybe this was a loser. Maybe this was a loser. But if you're rotating accounts, well, you had a winner here, winner here, winner here on a 30-minute opening range, winner here on the initial balance. Let's call this a loser. Winner, winner. All of these trades, the VWAP remount again here, boom, loses VWAP, remounts it. You can get long there. Use the wick as a stop. All of these trades are different ideas. All of these trades are different things. There's 6 to 8 ideas here that could have been put on today. 6 to 8 ideas that could have been put on today. Maybe 1, maybe 2 losers. But if we're rotating accounts, and let's say we rotated 4 or 5 accounts, at least 3 of those accounts are deep into the green. And the 2 accounts that maybe took a paper cut loss, cool. You move along. You move it along. Does that make sense, guys? How is that? Like that should make a lot of sense in terms of like managing, in terms of what you're looking for, in terms of how to just sit on your butt and be patient, right? So let me finish my drawing here. So VWAP. VWAP was a measured potential. And then we just put like we just put something like in this range. And then we say ATR was 26 points. TP should be set to, what did we say? 10 to 15 points. So that's half. 10 to 15 points for scalpers. But the thing is like a lot of people aren't just scalpers, or you think you're a scalper, but realistically you're scalping, you're getting your ATR, and then you're still holding, thinking that it's just going to go in your favor. Next thing you know, that thing's going the other way, and now you've lost all the money. The money's gone, guys. The bag is gone. You're on galaxy gas trying to figure out what the hell happened, right? So that's it. That's it, right? We don't want to be on galaxy gas, guys. So let's share this with the room. I'm just going to post it up in my channel here. But I don't think I could draw up a better play if I tried. You know? I don't think I could draw up a better play if I tried. Settings, I don't know. I just go to indicators and I put a VWAP. So if I go to edit study, can you see that? You probably can't. I don't know. Inputs, standard deviation -2, deviation down, deviation up 2. And it's just a VWAP. Yeah, you know. I don't have any crazy settings. It's not an anchored VWAP. It's not tied to anything. I don't know. It's just I just go on my chart and I go to studies and I go to add study and I go to all studies. I come down. I don't know if you guys can see that. And then I go to the V's here, and then I just go to VWAP. And then I just click that, and then it plots a VWAP on my screen. You know, are there different settings for VWAP? I'm not sure. I'm not a big VWAP guy. Like all my setups are not like I don't really use VWAP for my strategies. Like where I've built all my strategies off VWAP, I just use VWAP as another area of supplier demand. So the 20 is my like indicator, and then VWAP is just my supplier demand. And I just use that to confluence with my 20 SMA. So if I'm below 20 SMA, but I'm still above VWAP, well, I look at that gap, right? That's the gap that I have to play with. And then if I'm below 20 SMA and I'm below VWAP, well, I want to be all short-sided bias. If I'm above VWAP and I'm above 20 SMA, I want to be all long-sided bias, right? So that's how I use VWAP. So now we could take a lot of this junk off the screen because the trade's over. And now I'm happy. Now I'm happy. I'm not up a lot, but I'm happy. Because I executed to plan. I did my plan. I made $202. Whoopee me. $202 on a funded account. Whoopee me. Right? I've got another account here that's up it's up less than that. Where the hell are you at here? Come on. Another account is up 103. So that's $303 on funded accounts. $400 on a evaluation. I've got a lot more funded accounts that I can trade here. And then I got another funded account that's up 76 bucks. So what is that? $2, $3, almost $400, right? Now I'm not going to do that every day. Some days it's going to be less. Some days it's going to be more. But there's something to be said about it. Because let's just say $375 times 22 trading days in a month is $8,000. That's trading only 3 accounts. I've got another 9. Right? So if you look at that, I'm looking at the end picture here. I'm looking at what I'm going to do in the end of the month. Right? I'm pacing on 3 accounts, 8,000 bucks. Now you factor in the other 9. You know, let's just say even if I, you know, there's 3 more groups of 3 there. That's $16,000, $24,000 in a month if everything was to go perfect. Now, I'm not saying that I'm going to get them all to $8,000. And I'm not saying I'm going to make this amount every single day. But I like to play with that idea. I like to play with that idea, right? That's what keeps me calm. Not sitting here and saying, man, I'm only up, you know, I'm only up $375 on the day, and oh man, all these other people are making thousands. I don't care about anyone else. I really don't. I care about myself, and I care about my trading. Galaxy Gas. Well, so a lot of holding here at this VWAP all day. Sweep it, remount it, test it, bounce, test it, remount it, bounce, right? What do we do here? What do we really do here, guys, if we start to close below this VWAP, right? That bias is going to definitely shift to the short side here. And I've got this level of 889 that goes back to, when does this go back? Earlier this week, Monday, Tuesday high. No, just Monday high. Monday and Friday high. So this 889 goes back to Friday and Monday's highs. This range down here. Good spot for the bulls to recover a little bit of a bounce here. We'll see though.